If you're sitting in a home right now that used to feel perfect and now it just doesn't, or it feels a bit small, this is one of the most common conversations I'm having with my clients in Lancaster County right now, and it goes something like this. We love it here, we just need more space, but we're not sure if this is the right market or the right time to move, or even if we can even pull this off in the first place without completely disrupting our lives. Today, I want to give you a real, honest, and practical answer to that question. Is Lancaster County a good place to actually move up? And if it is, how does that actually work in 2026? Why Lancaster County is a legitimate move up market. Let me start with something that might surprise a few of you who haven't been watching this market closely. Lancaster County is no longer the overlooked, underpriced little brother alternative to the Philadelphia suburbs. It is a genuine destination market in its own right. And the buyers who are driving that are exactly who you expect. People from Montgomery County, Chester County, even people coming from Baltimore, or remote workers from New York and DC who realize they can get twice the home for the same amount of money. Why it's so popular is that you have real variety. You've got Lancaster City, which is a genuinely cool, walkable with great food and theater scene. You've got Lititz, which is constantly voted as one of the best small towns in the mid-Atlantic. You've also got Manheim Township and Hempfield, which have solid schools and a much more suburban feel. If you push more out towards Ephrata, you can get far more land for your money as well. So where are move-up buyers actually landing in Lancaster? Let me walk you through the most common corridors. Manheim Township. If you want the most amenities and proximity to the city and a school district that checks a lot of boxes, then this is the answer, but you're going to pay for it. Homes in the $450,000 to $600,000 range move pretty quickly here, and there's real competition. If Manheim Township is your target, you need to prepare to move decisively and be willing to go above asking price. Hempfield, these are for buyers who want a little bit more home for their money without sacrificing school quality. Hempfield's schools are solid and the property taxes are competitive. You can get into a 4-bedroom, 2-car home for around $380,000 to $500,000 range, but it's not quite as busy as Manheim, but it's certainly a smart buy. Lititz and Warwick Township. If lifestyle matters as much as square footage, and for a lot of move-up buyers it certainly does, Lititz is hard to argue with. The borough itself has a premium, and then Warwick Township surrounding gives you a little bit more room for the price. Demand again here is consistent and the homes in good condition do not sit. East Petersburg has a smaller market but still strong, and if something comes up here, it's usually gone pretty quickly. So it's worth getting all your ducks in a row and keeping it on your radar. Elizabethtown, Mountjoy, Marietta, they are pretty close in proximity. So if you're looking for a little less competition, a little bit more square foot for your dollar, then you may be able to get a pretty home option out there. There's also a lot of new construction communities starting. So if you want something that's going to be brand new or maybe has some extra incentives and you don't have to compete against other people, then maybe check them out as well. Now, here's something that I want to say very clearly because I think it's undersaid in a lot of real estate conversations. The neighborhood you buy in matters more than the rate that you buy at. A great home in a high demand neighborhood in Lancaster County has historically appreciated faster than the carrying cost of a slightly higher interest rate. I'm not saying rates don't matter at all, they do, but the location decision is a permanent one and the rate is not. A lot of people will say marry the home and date the rate. And while this is true, you want to make sure that you can comfortably afford that payment for the long haul because there's no guarantee that rates are going to go down. But if they do go down, it's likely that home prices will continue to go up. And then this is the reality of money because this is where the conversation usually gets a little bit uncomfortable and where I think a lot of buyers are making decisions based on incomplete information. The most common things I hear from move-up buyers are, I'm waiting for rates to come down before I do anything. And I understand that, I really do. But let me tell you what's happened in Lancaster County. Every time rates have dropped significantly in recent years, inventory got absorbed overnight, bidding wars returned, inspections went out the window, and the buyers basically, the asking prices just kept going up and up. The low monthly payment you get from the rate drop is almost completely offset by a higher price. Or worse, buyers lost the homes entirely because they couldn't compete. Right now in this market, you actually have some negotiating leverage that you didn't have 2 or 3 years ago. You can ask for some seller credits, you can get inspections, you can negotiate on terms, you can potentially use that credit to buy your rate down rather than the closing costs themselves. So rather than just handing it back in a bidding war, let me give you a real example. Take a $525,000 home, 20% down, a loan amount of $420,000 at 7%. Your principal and interest is going to be roughly $2,800. That number is going to be workable for people in the $150,000 income range. Although it's still a significant chunk at this price point in Lancaster County, you're going to be getting at least a decent home for your money. Now, let's say you'll be able to negotiate yourself at $12,000 credit towards buying the rate down. Depending on which lender you do, you might be able to get your effective rate down into the low 6s or even high 5s on a temporary basis. This means your payment will be nearer $2,500 to $2,600. Now, let's say rates do continue to go down in a couple of years' time, you might be able to refinance and be able to get that rate and that payment even lower. However, in 2 to 3 years from now, prices are almost certainly going to have gone up, which means unless you're able to save more than you think the home is going to appreciate, you're actually going to end up having probably a bigger payment or the same without getting the additional bump in equity. And then this leads me on to the second problem that people have. The second biggest question I get is, how do I buy a new home without selling my first one, or being stuck with 2 mortgages, or buying a home I don't really like? Now, the logistical challenge is not particularly easy, I'll be honest, and there's no perfect solution, but there are several perfectly workable ones that I do with clients every single month. It's going to depend on your equity, your financial picture, and option 1 is the contingent offer. You write an offer contingent on the sale of your current home. This protects you from double ownership, but it does significantly weaken your offer. So if there are multiple offers, it's likely that yours will be bumped to the bottom of the list. Option 2 is selling first and then either renting temporarily or asking for a rent back. This removes the contingency and it makes you a much cleaner buyer. Now, obviously, the downsides are you might be paying rent, you might be forced under pressure to find the right home quickly. Option 3, and this is the one that I do with clients more often than not, is talk about buying first and then using the equity in your current home through either a bridge loan or a recast structure. You can basically then list your home after you've moved. You can avoid any contingency problem entirely. The math has to work out for this, but for clients with decent equity, stable income, it can be a very clean solution. And there are a couple of others too. I briefly mentioned the lease back or a rent back, so you can sell your home and rent it back to you for the first 60 to 90 days potentially. Now, there are some risks associated with this as well. And then the final kind of point of this is the recast. So the recast is a great thing where once you manage to purchase the new home, you sell yours for the maximum amount of money. You then take the proceeds from that, recast your loan by reducing the overall principal. This will then reduce your monthly payment significantly, and you won't have to worry about paying huge refinancing fees. But ultimately, is Lancaster County even a good place to move up to in 2026? If your life has outgrown your current home and Lancaster County is where you want to be and where you're thinking long term, the answer is yes. The market has real demand, it has a great lifestyle quality, and the appreciation is real in this area. Is the timing perfect? Well, sadly, nothing in real estate is ever perfect, but if the conditions are right and you find the home that you love, then, we are in an area where you have a little bit more negotiating room than back in 2021. You can really use those terms to your advantage. My advice would be sit down, make a plan with a real estate agent, or if you'd like, book a call using the link in the description below, and we'll be happy to talk through the options, looking at your equity to see how we could potentially make that next home move a reality. And if you are wondering, just how competitive is the Lancaster market right now, then click this video here. And if you would like to learn a little bit more about how to purchase a home without selling yours first, then click this video here.